Ladies and gentlemen, in this video I want to explain the concept of correlated markets, and I'm just going to go and hit the nail on the head with the hammer. So correlated markets is the concept that some markets move in tandem to one another for one reason or the other. So you know that there are indexes that track the overall performance of the US stock market. We have the Dow Jones, we have the Nasdaq, and we have the S&P 500. So these markets move in tandem to one another, right? So on this chart above, I have the Dow Jones. So in this top chart, this top section of the chart, I have with me the Dow Jones E-mini futures contract. And at the bottom, we have the Nasdaq. So we have the Nasdaq 100 E-mini futures contract. This bottom with the green and the red bars. And the green bars will identify up close, and the red bars will identify down close candles. And on the up chart and on the chart above, so these are two separate charts. On the chart above, we have the Dow Jones futures E-mini. Now, you will be able to see, if you pay close attention to April the 22nd, you will see that the market formed a low on the Dow Jones. Pay attention to my marker here. And this low ended up being the low that led to a run up in the market, right? A significant run up. As a matter of fact, the market went from that low of 37,463 all the way to this high of 45,141. So that was a 7,618 bar increase between April 16th last year, 2024, and November 2026. So the market is trading within this range. Okay? Now, within that same time period, when the market forms this low on the Dow Jones, if you pay close attention to the chart at the bottom, the Nasdaq, the market also forms a low on the same April 22. And that low also ends up being the low of that market and leads to this rally higher. Okay, all the way to this high. And if you take that measurement as well, from the low of 17,148.5 to a high of 22,384. Now you'll also be able to see that some certain price swings occurred at the same time too. So like if you observe the Nasdaq at the bottom screen, you observe that this low formed here between April 5th, April 6th, and April 10th. And Dow Jones, we also have a low forming around that same time, right here, from April 6th to April 11th. And then the market rallies simultaneously. When the market declines on the Dow Jones from this high to this low. And around that same time, on the Nasdaq, I remember this time, we were in a type of a consolidation, right? So the Dow Jones fell this decline relative to the Nasdaq was deeper, right? So knowing that they move in tandem, this decline was deeper. You have a decline of 4%. And on the Nasdaq, eyeballing it, you have a decline of 3%. but then the market rallies up. Okay. So after that, we see a rally in price action upwards, bullish, and we also see something similar in the market. So when the market declines here on the Nasdaq, we also see a decline on the Dow Jones. This is an example of an index-to-index market correlation when two indexes move in tandem to one another. Another instance I'm going to show you is an instance where you have a stock that moves in tandem with an index. So in this example, we're going to compare Tesla, which is a stock that deals with automobiles and a lot of technology as well, and is also listed in the Nasdaq. And we're going to compare the correlation between Tesla's movements on the chart to the Nasdaq's movement. So on Tesla, on the 31st of October 2023, you see that Tesla forms a low on the market, a low of 194.07 right here. And Nasdaq also forms a low around the same period right here. Okay, so they both rally afterwards. You see price action move upwards, shoot upwards. Except here, they deviate. So here there's a divergence where the Nasdaq, on one hand, continues to rally upwards, while within that same time frame, the Tesla stock is moving downwards. Now, this is how you know that the market is bullish. So, say now you're observing a stock correlated to the Nasdaq index, and you see that the Nasdaq, from this point, this low that forms right here, the market sells here on the Nasdaq downwards, but the movement doesn't go all the way down. Unlike Tesla, the market also sells on Tesla, just like on the Nasdaq, but the movement goes all the way. But you know that the Nasdaq is the index, right? And it's tracking the broad market. So when you see institutions buy, you know this market dropped, but it didn't keep going. It didn't sustain that downwards movement. Instead, the buyers got in and sold price even higher. That was a manipulation, and buyers bought all the sell stops that were resting out there. So you seeing Tesla stock move downwards, you should see that as a potential buy and possible market manipulation, because institutions are bullish on the correlated pair, the Nasdaq. So if you see the market coming down on Tesla, you know that it cannot be a true move, because why would institutions be bullish on the Nasdaq and bearish on Tesla? You also see Nasdaq forms a high here, Tesla forms its high here. Nasdaq makes an upswing, Tesla makes its own upswing. And you see, when Tesla starts to decline with this high of 488.54, Nasdaq also starts to decline on the same day with a high of 22387.75. You can see right here. And that move leads to this downwards move, and Tesla too also to this downwards move. And the last correlation I'm going to show you is the correlation between a stock and a stock. So when you look at stocks that are correlated for certain criteria, and for this one, we're going to compare Tesla to Rivian. Now Rivian is another car company. So they belong in the same industry, which is the automobile industry, right? So they share something in common. They belong to the same industry. So general market factors that will affect the economy of that industry will affect both Tesla and Rivian. So let's try to take a look at the chart now and find some type of correlation. And we can look at from where Tesla finds its low. April 22, and we can compare both charts. So this low on April 22 on Tesla, low of 138.80. Do you see how Rivian also forms a low on April 22? And then Rivian shoots up, parabolic up movement. We also see Tesla shoot up. Now, see Tesla declines after that movement upwards. Rivian also declines after that movement upwards. But do you see how Rivian declines, forms this low, and then declines even further? Unlike Tesla, within that same time frame, Tesla declines, finds a low here, and buyers buy this low of 182 and send Tesla higher. So when Rivian is forming a lower low, Tesla was forming a higher low. This was the low of Tesla, this was the low of Rivian. Now, this is the new lows of Tesla. Within that same period, these are the new lows of Rivian. So Tesla is in an upwards trend. Rivian is moving downwards. Possible market manipulation for Rivian because their correlated market is bullish. So it's possible that this downwards movement is institutions buying up sell stops. Sell stops under these equal lows here. Sell stops under this swing here. And what do you see here? You see a range. So price ranges, accumulates buy orders, and then bursts up. So now they're now moving in the same tangent again. And it's very likely that Rivian will see a move up, just like Tesla is going to see a move up. This is stock to stock correlated markets.